everyone. We'll start. If you have any question, please you can ask. I'm going to start. Okay, welcome. So this week, we're looking. Last lesson we also discussed about, we had a lesson one. We discussed about different standards. We discuss about ethics. We discuss about rules. So today we're looking is be able to interpret financial statement and make justification and recommendation for the stakeholders. So stakeholders mean anybody who has any interest in so in the company we call is financial statement is a stakeholders. Anybody who has any interest in the business is a stakeholder. Financial statement and consolidated statement. Consolidated mean which is comprehensive. Always good to be have a knowledge about which we can most of you working Okay, so in the previous lesson we also discussed about some of ratios and ISAs. Okay, so interpret the financial information and ratio analysis. When interpreting the financial statement, it is important to we can look around the user of accounts and the financial information. We have different stakeholders. Those are really interested in these ratios, and we need to be look around, how we can use it effectively. Okay, so that will be in our discussion today, which we'll go through. So some discussion. Ratios are the simple calculation based on the interactions in the set of the data. For example, we can look at the changes in the cost of the sale are directly linked to the changes in the sales activities. The changes in the sale activities also have effect upon wages and salaries. We can look around, not, always good to be look around the limitation about these financial ratios as well. So we prepare different types of ratios. Current asset divided by current liability can be current ratios. Current asset minus inventories. We can look around these ratios. Liquidity, because normally benchmark 2 to 1 is about the current ratios, which is current asset divided by current liability. Liquidity ratios, which is 1 to 1, which is quick ratios or asset ratios. And use of resources. Profit from operation divided by the finance cost, which will carry on looking in non-current yes liabilities and total equity plus non-current liability, which we can getting if like you drive the car in a high gear, which is a high risk, that's really we need to look around in, and profitability ratios and liquidity ratios. Under this, on our Moodle page, we have the document which we can look in a minute, which we'll go through. Okay, these are all the required formula in formula sheet. The return on capital employed, we return on total asset, return on equities, gross profit, margin, expense to, and that's also good to look around expense to the percentage of revenue. How much expense we have against the revenue, which we can look around as well. It's quite good too. So please, that's, we can inventories and turnover, which we can look around. Trade receivable, trade payable, and asset turnover and asset, So these are all the ratios we can calculate. So please, on the Moodle on this page, I'll quickly show you. So here are the extra resources. Can we see here? Yes, please. It is good too. So we've been given financial analysis question bank and answer bank. So which is quite good to, like, we can look around, quickly show you. Okay, so please, on the Moodle, you can follow the question bank and answer bank for further understanding about the ratio. Let me show you in a minute. And then you have answer bank as well. So that's quite good to look around the question and answers bank financial ratios. Okay, so until now, minutes. I will discuss further on these ratios. We had a discussion before as well, and we can pick a few. Okay, so this is one of the tasks, we had a discussion, we can look around either. Yes, so we've been given the financial statement of the company, Anika and Papika. If you want to look around other companies as well, their financial position we have. Yes, we can find, and we've been asked, to calculate these ratios required and measure the company performance. Or you can look around other companies as well, like we have here Anna Lewis, yes, this company, and we've been given the 2 years accounts. Yes, and we can look around Hamden Limited, and then we've been asked, to calculate, yes, these ratios we can by using the formula, and we can comments. And can you see all? Yes, please. If you have a question, you can ask. And then, yes, in our assignment purposes, we can use any examples. Yes, because it's not your exam based, it's assignment based. So we can look around internal, external user, different stakeholders, other user about financial statements. Yes, that's quite good to look around. Okay, which we can. Okay, so take you back to our page. So these are financial ratios we are discussing, and it's quite good to these extra documents which is available on Moodle to look around. Okay, so we can look around when we compare the ratios. We always looking the different user and different interpretation of the ratios. Ratios of the previous accounting period for the same company, ratios another company which we can look around. We can comment on the specific ratio, not only whether the ratios is improved or deteriorated towards we can, and we can use the interpretation of the financial ratios. Yes. So return on capital employed, we can look around profit. Yes. We can look around expense. So these are all. Please, I'll quickly copy for you here. Link is quite good to look around some quizzes if you want. Yes, so which I mentioned in the previously for taxation, others those are doing. So 1 second, I'll show these, and I'll copy the link for you for extra ratio analysis, and some these tests, quite good to look around with it. Okay, so right. Yeah. So we'll give you good to look around one of them, which is based on our unit. Okay, so please, when you do, it's quite good to look around this one. Level is about financial reporting. Yes, the basic understanding. So quiz, that's, in the chat box, please, you can copy the links and you can do it in your time. It's quite good to look around these two. Yes, that will help you. And we can pick, some example from these for our assignment as well, if you want to, when you write your assignment. That will be in next lesson will be our assignment discussion. Okay, so that's quite good to look around. Uh, Any question from anyone? If you have, please you carry on asking. Okay. So we had a discussion about these financial ratios by using the formulas we can use and these financial ratios, and we can do the interpretation of the ratio. That's the most important things, which couple of years. So we can look around the liquidity ratios. Liquid mean anything which we can convert into the cash. Normally 2 to 1 is the current ratios, 1 to 1 is the quick ratio. That's really we need to focus. Then we have yes, so we can look around cost versus inventory turnover days, inventory holding period, trade. Okay, so what we need to do, we need to look around the cost of sale divided by inventory, inventory turnover days, inventory uh, receivable, inventory turnover days and inventories, how many times is turnover. That's, which we can look around. Trade receivable days and trade payable days. Always trade receivable days should be shorter than the trade payable days. So we have a safety net, that is quite crucial and which we need to be maintained in the companies and to increase the performance of the company. Okay, so financial position of the company, gearing ratio, high gear, high risk, that's we need to be, and we can look around two companies as we seen in the handouts, which are separate ratios. We can look around Nika and Papikas. So we, according to this 45% and 52 and 9 and 11. So we can compare the performance of two company, Anika and Papika. And based on this, we can look around which company is performing better than others. According to the profitability ratio, the Nika, Papika is betterly performed. But when we look at the gearing ratio is very high for Papika compared to, so less risky than Nika, and interest cover ratio is less risky for Anika as well. And interest cover ratio and asset test ratio, these are quite good for Anika compared to Papika. So on the basis of these ratios, we can make decision where which company you invest, and we can use various types of analysis. The company performance, we can look around one period to other period, and we already had some discussion in the past. We can look around the industry averages. What we'll do today, we look around one more elements within that, which is balance scorecard model. In a minute, I'll give you. Then we 4.2, we can justify it based on this, which one is the better. So gross profit is the better in Papika. Operating profit is better in Papika, but Anika is better in gearing ratio, interest cover, and asset. And the basis of this, we can decide which company is betterly performed. So that's, which we can do a discussion in our assignment, which we'll go through under. Okay, then we have a 4.1M. If you want to look around the merit criteria, so financial statement manipulate the type of accounting ongoing problem, which we have creative accounting is a big problem. Enron at the moment, yes, it's a big, history really is of the scandal. So financial ratio we can trust up to some extent, but we can't rely on. We can look around what are the new accounting standard the companies are following, because these, in future can be impact, so we gaps and IS1, IS 17, IS 16, International Accounting Standard 16, and International Financial Reporting Standard IFRS 16 is being changed to, because the leases can be two types, and the leases we are looking, the leases which is more is financially is reliable. Yes, that's, which we need to be looking around that. So always good to be, that's financial ratio, not we realize only, we look other factors as well, which will look, the balance scorecard model, which will show. Always look the legislation. That's what's happened with these companies. What's, these are the biggest scandal, and that's, not really sustain anymore in the business. So that's, their ratios was absolutely fine, no issues, but their creative account and manipulate. So we have to look around as in a list point of view. So number of other issues. So you will see the Enron scandal is there. Yes, that's the biggest company, not sustain in the business, 24 years in imprisonment, the CEOs and all of this. Those were the sporting and World Telecom scandal is also big. It's quite good to look around. American Insurance Company Group. Yes, these are Liam Brothers. Yes, so all these, the creative accountant is the process where the accountant use the knowledge and accounting rule to manipulate the figures. That's the biggest issue we have. Transformation of the financial accounting figures and actually are to what prepare desired by taking advantage of the existing rules and ignoring it. That's which we need to. We can look around. We use creative accounting, the shareholders and the market reactions, yes, related to more and more managers and actions. Yes, we can look around EPS, earning per shares, and we can look around the companies and the directors. Yes, measure. Creative accounting hide the particular bad years, force the exceptionally good years, and continues to be pursue always the best. Yes, smooth, out result and the boost, asset the avoid the takeover. That's carry on happening. How the accounting regulators try to reduce the choices of accounting. Yes, minimize the use of the judgment and reduce the estimate. And because that's why we have a accrual basic accounting, not cash basis. That's other issue we have in accounts at the moment. Yes, reason for creative accounting reports steady trends, avoid rising the expectation high good years that the company many many conceal these long-term changes in the profit and loss. That's which we need to look around, like these carry on happening like. Okay, so we can look around manipulate profits of these companies and some creative accounting issues which carry on happening. So we need to be make sure these, should be not only relied on the ratios itself. So that's which we need to look around. Okay, then we can look around the some are the common method of accounting manipulation. We can look around excessive provisions, extraordinary item not allowed, off the balance sheet finance, capitalize, cost, non-trading profit, and the brand accounting. These are all, becoming. So is the creative accounting ethical? There are the legitimate techniques can be employed when certain, but creative can be managed and the accountant be, yes, their action and consider the five professional code of ethics. We discuss about professional behavior, professional competency, due care, and integrity, confidentiality, and objectivity. These ethics also, not just the rules, to tackle these. Of course, standards carry on coming, which we need to be in conclusion. Creative accountant should be used. It's within the of the law, yes, and achieve the company ultimate goals and increase the stock value and much of the benefit of the company in the short run, in the long run, and not mislead. Because under IS1, that's the key, which we learn in the lesson 1, is the true and fair information. That's which we need to be provide. So we can use the ratios, financial ratios, to look around. We've been given the question in the question bank, that's other, yeah, it's a handout which you have, chapter 7 of the handout, which is available on the Moodle. I quickly show you. BSc balance scorecard is very popular techniques, which is we need to be use this model as well to assess the performance of the company. Yeah? So not just the based on ratios, we can look around based on balance scorecard model. So balance. Okay, quickly, I'll show you the last bit. Yes. Okay, guys. So this is balance scorecard model is quite good to be, which we can explore and we can look around. So balance scorecard is given by the by Norton and Kaplan, one of authors. It's help you to measure the performance measurement. Always when you're looking at the company performance, don't rely just on the ratio. We can look around the financial perspective. How do we look, shareholders? We can look around internal business. Yes, we must, use Excel, and we can look around innovation and learning perspective, how much company is spending on these, and the customer perspective. So all perspective we can look around. We can look around critical success factors, CSF, each, the customer perspective, internal perspective, and all is very crucial. We can focus on return on capital employed and the survival. That's also quite crucial to be explored in the company performance and our objective and different objective, and we match with the strategy overall. What is the company? So when you read these annual reports, so look around different ISs, interpretation of the financial ratios, and look around the balance scorecard and different perspective what strategy the company. And because the Nokia, maybe 1 year they save it, we're not using any more Nokia because the Nokia not innovated, they close. So they focus more financial perspective, not learning and development perspective. That's why the companies stay behind. So we can give true and fair information too, as based on our own analysis. Any question from anyone? No. Yes, please. If you have a question, you can ask. We'll keep up to here, and next lesson will be assignment discussion. Yes, please. Anyone, any question? No question. Okay. Thanks for attending today's session, and hope we'll speak you next week. And please, if you have any question, you can drop me email or drop us email. And have a lovely weekend.
Bye-bye.
And thank you. Bye-bye.
Bye.
Thank you. Bye. Thanks for attending. Thank you.